Surprise, the trade of the day is not going to be Rivian today. Obviously, it could have been with the lockup, but the setup in NIO was a pretty interesting one, just given the two types of trades we're able to execute and look at. Now, obviously, a down day in the market. You had the week that we had last week, and then, of course, gapping down in the morning. So there are plenty of things that we're setting up for shorts, but you got to set that stage. And NIO, we're looking at a daily chart here. Sometimes we get to 15, but today, I want to make sure we're showing the daily so you can see that ultimate target still in play here, that $13, and a couple of other lines marked off here. Just the recent low from last week, that's 16, and then right here, you've got the low from Friday's action. So a couple of levels starting to come into play with the gap down, overall market weakness, and it was one of those mornings where pretty much everything was a short till it wasn't. We marked off some even dollar levels. That put that 14 break into play. But we're not going to be looking at a 14 break right away at the open because there's something called the pop and fade. When you have a market that's down this far, a lot of times if it's going to try to break out early in the session, you can get one of those crazy wick bottoms and a big massive breakout. But if we get a failed breakout to the top in a weak market, those are some of the best shorting opportunities. And that's exactly what happened here. Right at the open, NIO tries to go once, and then tries to go twice through to this 1450 area. And if you remember what 1450 might have been, that was that previous low from Friday. So significant price level. Once it failed the second time, that was an entry on the way back to the downside. We're scalping some out in the midst of that first consolidation point. And then the rest of the trade out in front of that 14 low. Now, why get out in front of 14 low? Because we're short in a 14 break. The market was going absolutely nuts, up and down, whipsaw action on every stock that I looked at. Retesting highs, retesting lows. In that kind of environment, I would rather be trying to work back in, and I wish I had gotten it this little turn here at 1440, but did not. It was either work back in off the highs or wait till it breaks out that 14. It makes the 14 break. We immediately work it down to 1375. It even gives you a reload trade back at 14 even. Eventually sells in at 1350. I was trying to hold out some for the home run, thinking you could get down to 13, but the market tried to catch a little bit of a bid here, and we did rally to the upside. Now, this is one of those situations where if it's going to be, like we said, the start of a week, and you get those crazy bottoms in a market in the morning when you've already been so beaten up, a lot of times you don't want to get trapped if we're going to make a harsh reversal. So we did stop that one out when it got back above that 1405 level. Just not willing to have anything that was showing some relative strength on the bounce go all the way back up toward those highs. Not going to hold all the way through. Would I have shorted at 1450 if we got there? Yeah, I probably would have. But ultimately, when you have that kind of a market, you want to wait for the key prices. In this case, it was the failure through Friday's bottoms, that 1450 area. It was the failure through that 14 even. And then next thing we're probably going to be looking at is, can it hold up at about 1350 on the way to what might be that ultimate $13 on NIO. Lesson here always, though, when trying to hold on to some of these trades or trying to get into these trades, is sometimes you've got to be willing to buy at the top in the bull market or sell at the bottom in a bear market, because you can always go higher and you can always go lower. But as long as you can structure the trade, there's winners to be had.